Are you an online educator struggling to find your audience? Quasar Markets connects you with learners looking for you. Keep 100% ownership of your courses. No hidden fees. Already have monetized content? Get paid again and again. Apply today. Take control of your educational empire. Quasar Markets, where educators build their legacy.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, everyone, and welcome to Quasar Markets Live. It is Monday, August 18th, and we've got a jam-packed week ahead. Man, this is one of those weeks where geopolitics, macro policy, and earnings are all going to collide at the same time. You know, we're talking record highs in the U.S. markets right now. Peace talks at the White House between the Ukraine, Russia, and Western leaders. And of course, the big one, our man Jerome Powell and the Federal Reserve's Jackson Hole Symposium later this week. Oh, and if that wasn't enough, Bitcoin pulling back hard after tagging fresh all-time highs last week. So let's get into it all here today. So far, as we look at the markets, advanced decline is slightly positive at about 689. Dow futures are off about 47 points or 2 basis points, sitting just under $45,000 after a strong 2-week run. S&P is down right now about 0.1%, not even 0.04% to be exact. And the SPY's at 643.44. And if we look at the NASDAQ, that is down about 0.1%, right around 23,768 on the NASDAQ 100. If you're looking at the triple Qs, it is currently at 577 or so, down about, again, 0.1%. Now, context does matter right now. All of these three major indexes are coming off back-to-back winning weeks. The Dow gained 1.7% last week. The S&P was up almost a full percentage point, and the NASDAQ added 0.8%. That makes 4 out of the 5 weeks higher for the S&P and NASDAQ. So keep that in mind. As much as, you know, it seems like there's been some pretty big hits to certain stocks overall, you know, we're still marching up, or at least holding very well. And interestingly, small caps really ripped last week of more than 3%, which tells me traders are leaning into this September rate cut theme for sure. As I mentioned, again, you know, futures this morning are red, but when you zoom out, we're talking about a little bit of red near all-time highs. So market is literally still within striking distance of new highs across the board. Dow closed Friday at 44,946, S&P at 6450, and the NASDAQ at 21,623. And what's still supporting this, or, you know, keeping the markets rather bullish, is the VIX, right? We've talked about the VIX, the VIX, volatility index guide, you know, and it's Wall Street's fair gauge, right? This tells us where it is, sitting at 15.44 right now, well below that 20 threshold that usually signals volatility. Last week, when it was even a little lower, I did say I was buying and did buy some long-dated calls here on it. You know, what it shows me is traders, though, are not really hedging aggressively ahead of the Ukraine talks or Jackson Hole. The market is saying we've seen these movie scripts before, and we're willing to stay out until something forces us out. So again, the bulls aren't taking profits, it seems like, and we continue to move to the upside. here at Quasar, as you know, Steve, especially, and myself also have been talking about the need to make sure you're taking profits, make sure you're playing it close to the vest. It's without a doubt the best move to make here. As I mentioned today, we have a lot to get into here. We're going to get into some macro and geopolitics, the Ukraine talks at the White House. What might Powell say at Jackson Hole? We got to take a look at what's happening in Asia overnight. Chinese stocks are doing pretty well. Asian stocks are absolutely flying. Highest level since 2015. Europe, not the same story. They are stumbling a little bit. We'll get into some of the stock movers today. Berkshire's new play on United Health. Dayforce as a buyout target. One that I didn't have on my bingo card, renewables are ripping, and Novo Nordisk with another Wegovy approval. So lots to talk about on the pre-market movers. As I mentioned in the opening crypto market update too, Bitcoin fell back under 115 after tagging 124K and setting a new all-time high last week. We saw $500 million in liquidations in the last 24 hours. So I'll break down what's going on there. We're going to talk a little bit more about housing and home builders today. It seems like everybody's starting to pile in, right? Again, the Berkshire Hathaway announced new announcements, and we've seen other ETFs and hedge funds getting into it. But is it too late to handle ahead of Jackson Hole? We'll tell you what's going on there. And then our look ahead, what's up this week? We definitely have Walmart, Target, Lowe's, Home Depot, all on track for retail earnings. And then, of course, Powell at Jackson Hole on Friday. So if you're trading equities, options, or crypto, today's show will give you a little bit of a roadmap for the week ahead. Let me take a quick sip of my drink here. We'll mention BigBeat is on the floor. Well, he's going to be on New York Stock Exchange TV here this morning. So he is not with us today. He will be back for the rest of the week, and we'll have our regular lineup going and ready to rock and roll. Good morning, Ron. Good to see you in the room, my friend. Hope all is well and you had a good weekend. And I got to ask, since I'll ask Ron, since he's already put it in the comments, but would love to get some more comments by people. Please hit the share, like, all those fun things for us. Quick question. Who thinks Powell cuts rates by 25 basis points in September? And who thinks we're headed for a more aggressive 50 basis point jumbo cut? Let me know in the comments, and we'll circle back after we get through this section here. So let's kick things off with big macro and geopolitical drivers. As I mentioned, they're driving the bus right now. We are back into tweet analysis over technical analysis for sure. All it takes is a few, things to either fall into place or out of place for the markets to move one way or the other. That's why we want to get you up to date on everything going on. We've got Ukraine talks happening right here in Washington, and Jackson Hole looms at the end of the week. They could be some catalysts that either reinforce this bull trend I talked about or inject some volatility into the market. Again, I'd ask you guys, what do you think? Ukraine White House talks. So let's start there. We got European leaders and the Ukraine's President Zelensky arriving at the White House for talks with President Trump today. This comes after Trump's meeting with Putin on Friday, where they did not reach a ceasefire deal. Instead, Trump did soften his stance. He dropped the demand for an immediate ceasefire that he had talked about going in. But Putin reportedly opened the door to Western troops being involved in some kind of future security guarantee for the Ukraine. What does that mean for the markets? To me, markets do not like uncertainty, but they love progress. Even the faintest signal that the war is moving towards some kind of framework for security is going to be taken as bullish. I did think we'd see a little bit more bullishness, a little bit more good news come out of that meeting with President Trump and, Putin, but it didn't happen. Does that move forward more today would be the question we have to, sort of take a look at. You got to remember geopolitical risk has been an undercurrent for the last 2 years, but it hasn't derailed this bull market. As the boys at Prosper Trading mentioned on Thursday, the markets are Teflon right now. I think it was my man Dan O'Brien that had that one. Traders are conditioned to see dips around headlines as buying opportunities. So we've seen, it is, buy the dip, sell the rip right now is still the case. And that's what we advise right now. Again, bulls make money, bears make money. Pigs get slaughtered. That has been a line in the stock markets forever. And case in point, futures are, a little soft this morning, Dow off about 28 points, S&P basically flat. NASDAQ futures down about 15 basis points. That's hardly panic. It's more positioning. People are waiting to see if those talks actually deliver something tangible today. And I will say this, if we get headlines later today about Western troops formally being part of a security package, I do think that would be bullish if confirmed, right? It could be a game changer for sentiment, not just in Europe, but globally. It would definitely reduce the tail risk, the fear of sudden war escalation, and that usually means money flows back into equities and crypto, especially cyclical names. But if this talk stall, if we see anything like the last time that Zelensky came to the White House, traders will fade those headlines, and you'll see a small risk-off move, maybe into treasuries, maybe into gold and Bitcoin. But again, with the VIX, at 15, the market is still telling us any dip is probably a buy the dip opportunity, more so than a significant move to the downside. Jackson Hole on Friday. I will say this is the one, this is the wild card that could change that. And back in 2022, Powell took advantage of Jackson Hole to really show talked about inflation, talked about the need to raise rates. And we saw about a 15% pullback after that. So it is something that you do need to keep on your radar. Do want to mention tick is down about 150 right now. Advanced decline, though, has just moved up to about 705 on the upside. And if we do take a look at the indices here, we do see the 10-year, 30-year, both moving slightly down. The 10-year at 4.314 today, 30-year at 4.91. Mixed bag when you look at the sectors of the S&P using the Spider Select funds here. We see energy down, utilities down, technology down, consumer staples slightly up, industrials and communication sector down, healthcare is up, financial sector down, and real estate to the upside. So very much a mixed bag. If we look at the Mag 7, good morning, Zora. Hope you're having a good day. We see Microsoft and Google, the only two green so far this morning. So again, we definitely seen a little bit of weakness, but in general, man, it's been tough to fade this market. It has been that buy the dip mentality. We've just seen it be so prevalent here in the marketplace recently. Again, sort of getting back to Jerome Powell here. Oh, Ron, we have that I have that on the watch list here. We will definitely be talking about the solar stocks here today, without a doubt. The other massive theme of the week, Jackson Hole. This is the Fed's annual economic symposium in Wyoming. Beautiful place. And every year it's where central bankers, economists, and market pros gather to talk big picture. But the real focus is on Fed Chair Jerome Powell, who speaks on Friday. And right now the markets are basically pricing in an 85% chance of a rate cut in September. Again, we look at that using the CME's FedWatch tool. So the question is, does Powell confirm that, or does he push back? That's going to be the big question on everyone's mind. The tricky part, inflation is cooling but not collapsing. The Fed has room to cut, but some on Wall Street are saying if Powell goes with a jumbo cut, that 50 basis points, it could actually look panicky. What does the Fed know that we don't? And the markets hate that kind of signal. So I think the base case is Powell hints at 25% in September, but leaves the door open to more if data weakens. The famous, data dependent line comes out. That way the Fed threads the needle. They support markets without spooking them. That backdrop is still bullish, that I would point out. So we'll keep that in mind. 25 basis points, like I said, is a little bit of calmness. 50 basis points, a little bit of panic. Goldman Sachs did point out that last week that earnings revisions were unusually strong this season. More than half of the S&P companies revised guidance upward. Combine that with the prospect of cheaper money in September, and you've got a supportive environment. That's why the S&P is still sitting near record highs, even with all the noise we're seeing right now. And again, I'd ask you guys here, what do you think? Will Powell play it safe? Will he go 25 basis points? Or do you think he surprises the market with a 50 basis points jumbo cut? And more important, do you think that 50 would make the market celebrate or freak out? Let me know. Put it in the chats, guys and gals. So big picture, Ukraine talks today could deliver headlines, but really Jackson Hole on Friday could deliver policy direction. And that's one of the reasons that we're definitely seeing. Okay, we got it coming in. Oh, Prosper coming in with 50. Saying 50, no good. I agree. 50 would definitely be no good. 25 basis points seems to be where we all want it to come in. So hopefully Jerome's listening this morning. If so, sir, welcome to the show. Please follow what we're saying. But in the meantime, we've got global markets that are sending signals, some huge stock-specific stories. Let's take a spin around the world and see how Asia and Europe kicked off the week. I figured it was you, Mr. Bauer. I did. Hope everything's well, sir. And 50, yeah, I think that would absolutely spook the markets myself there. So starting in Asia, the Nikkei 225 closed up almost a full percentage point today at 43,714. That is a brand new high there. So we're not just setting new highs in the stock market here in the U.S. Let that sink in for a second. We've heard about all of the issues Japan was facing, but their benchmark also at historic levels. And it wasn't just tech or exporters carrying the load. The gains were broad, led by consumer cyclicals, healthcare, and industrials. Some of the top movies over there, Suzuki Motor surged over 10%, Cyber Agent up more than 7%. And for me, this Japan rally really talks to two things. Domestic demand is stronger than expected. Investors are still willing to rotate into the growth sectors even after a long rally. The takeaway I also have is it shows, though, that these investors aren't looking for alpha maybe in the U.S. right now. Seems like they have alpha at home, so that can be a little bit of a headwind, in my opinion, to our stock market. On the other side of that, you've got the China Shanghai Composite. It closed up nearly 1% at 37.28, its highest level since 2015. That's right, 10 years. It's up over 11% this year as Trump delays tariffs on Chinese exports and optimism around a trade deal builds. CSI also gained, hitting its best close since October of 2024. So while people in the U.S. worry about slowing growth, Chinese equities are telling a very different story. Stabilization and upside. Question I always bring up, though, or point I always bring up is, do you trust the numbers or the story coming out of China? And I saw a good segment this morning, I think it was on Bloomberg, where one of the analysts talked about the fact that, China has never held up to their side of any of these sort of trade deals. So why do we expect it to be different this time? Elsewhere in the region, Taiwan's TAIEX hit another record high, up about 0.6%. And India, which has been the laggard, surged about their Nifty 50 surged 1.2% after news of tax cuts on small cars, a big stimulus lever for their middle class. We know the rupee has been at all-time lows versus the dollar, or long-time lows, I should say. I don't know that it's all-time lows. And Australia's ASX 200 managed a gain up 0.2%. South Korea was the outlier. The Kospi fell about 1.5% after the recent two-day run-up. If we look into Europe, it is a little bit different there, very similar to what we're seeing here in the U.S. pre-market. The stocks is down about 0.2%. That is Europe's 600. Germany's DAX is off about 0.3% or 300 basis points. And the UK's FTSE 100 is basically flat, down just about 0.1%. It's giving you what you'd expect. Ukraine is literally at Europe's doorstep, so traders are more cautious, waiting for those White House headlines there. It's not a panic, but it's certainly not risk on like we saw in Asia. And as I said, the kicker is that the CBOE's volatility index, the VIX, is at 15.48. It's deep in the low volatility zone. Anything under 20s in the options market means it's pretty calm. Traders aren't aggressively buying protection. As I said, Mr. Bauer piped up a little earlier. He's the one that I always use. His line is buy this protection when you don't need to. That's the idea, and I like it when it's down in these levels. I'm looking out a little bit, a few months, and at longer dated calls there. And let me ask you there, with Asia setting records and Europe hesitant, who do you think has it right? Is Asia showing us the global growth trade is still alive, or is Europe being smarter here and staying cautious until the Ukraine situation plays out? Let me know what you guys think on that one also. Okay, we talked about what's going on overseas. Now let's get into what's going on in the U.S. Still the biggest story of the week or over the weekend was Berkshire Hathaway's announcements on Friday. United Health, it's been the talk of Wall Street since Friday, like I said, since Mr. Buffett and Berkshire Hathaway announced their position into it. They were only one of a few that did. We do see that it is up another 3.17%. And again, this is one that BigBeat called here earlier, that he had been hearing talk that UNH was going to be one of them. This is classic Buffett, right? United Health isn't flashy. It isn't AI. It isn't a meme stock, but it's a cash money cow in the healthcare sector. Strong reoccurring revenue, massive scale, and it benefits from long-term demographic trends like an aging U.S. population. Healthcare has been beaten up a lot this year, UNH tremendously. So Buffett's basically telling the market, you guys mispriced this and I'm buying. And of course, when Buffett buys, the copycats start to pile in, up 3.24%. And if we zoom out here, it's still not anywhere near its 200-day MA at 440. For me, does a gap down to 334 back here in May? That's the first target for me, would be that 335 level. If we can get to that level, watch out above. But this one, is usually, it's usually a slower growth to the upside on, a stock as large as UNH. And again, I'd ask you guys, do you think Buffett's making a value play here? Is this, the final swan song for the Oracle of Omaha, or is this just a small dip and he just sees a little bit of value? Let me know what you guys think there also. Next up, Dayforce, another one sort of out of the blue here. Up about, it's like 24.32% this morning. Dayforce is up on talks that Thoma Bravo is in talks to take the HR software company private. If you don't know Dayforce, it used to be called Ceridian. It rebranded in 2024. They've been a player in the payroll and HR solution sector. And while they've had some momentum back in, 2019, 2020, stock has definitely struggled in recent years, as you can see, down about 27% year to date before the news. Market cap sit right at about 8.4 billion. Now Thoma Bravo isn't new to the game. Just this summer, they agreed to spend about $2 billion to take over Olo, a restaurant ordering platform, and take that private. It looks like they love these software names with sticky enterprise clients, and they do have a track record of cutting costs, boosting margins, and flipping them later. For Dayforce, this is validation. Even if the public markets weren't buying their story or stock, private equity sees value here. And the trend we've seen more and more, undervalued SaaS, software as a service, firms getting snapped up off the market. And this one, not in the AI side, really. So that would be the difference. Ron, I'm going to bring up your headline to take me into the next part here because you nailed it. I got to talk about renewables. We've seen a huge move. Sunrun surged 33% here. First Solar jumped 11%. Investis out of Denmark rallied 15% after the Trump administration released new guidelines on Friday around wind and solar tax credits. Turns out that the credits will be more favorable than expected, and traders are jumping all over it. I do think this was a big turnaround from what many expected, right? It's been all about, oil, drill, baby, drill. But behind the scenes, this is pretty good to see. And like I said, it's interesting because Trump hasn't been the friendliest president towards green energy. But politics aside, the economics of renewables are hard to ignore. Between global decarbonization goals and corporate ESG commitments, these companies have secular tailwinds. So when they get a policy break, even a small one, the stocks rip higher. That is the case here. And you can see FSLR up about, and we are open. Markets open here. Let's get into it. Advanced decline only up 364 here. So first move or the market open move was a little bit non-dramatic here. The Dow opens up at 44,900, down about 10 basis points. SPY is pretty flat, and the Q's pretty flat on the open here. Gold at 33.42. Up slightly here. First move there is actually a pretty muted move here. Q's moving to the upside nicely here. So Algo is buying up to the upside first. 577.30 high in the day so far. 577.30 on the Q's and 643.26 on the SPY. Wow, we're seeing a lot of volatility here. Most of it's starting to the upside, so we like to see that. Bitcoin's first move is to the upside also. So after that runoff that we'll talk more about here after we see how the open goes, a little bit of a bounce back. Same thing, Ethereum 43.54 after hitting a low below 4,300 earlier this morning. That first move to the upside has been sold off on the Qs and right back about where we opened at 576.83, middle of the trend. Same thing across the SPY and the Dow Jones. Let's take a quick look at the Mag 7. So a little bit different than pre-market. We now see NVIDIA open up in the green, Apple in the green, Microsoft stayed in the green. Google, Amazon, and Meta moves to the downside. Meta now down to almost 3% here this morning. And we see Tesla up 0.5 percentage point. Same thing with Netflix. As the sectors start to flesh out here, big loser, energy sector this morning down about 1%. Looks to be the biggest laggard on the day. Then you have the communication sector down about 70 basis points. On the upside, they're not really big gainers, but healthcare up about 0.25 percentage point so far. So again, broad market not looking all that strong. Advanced decline now down to 264, so sort of lowest of, well, it was down at 18 in the free market, so it could get even lower. But So far, no real move one way or the other here. In fact, Q's trading almost directly in the middle of, so far, the daily trading range. So a lot of chop without a real direction here, one way or the other. Let's see what's happening with those early morning gainers, and I'll get back into them here. But Dayforce holding up pretty well, still up 24.8%. First Solar giving back a little bit here, but not really. Took a big spike to the upside on the cash market open, up about 8.29%. Sunrun up 15.73, same thing. Took a big jump on the cash market open, seeing a little of a pullback off of those highs, got as high as 1656. But those names definitely looking strong here today. ENPH, another of those, Enphase Energy, same type of look there. Another one we'll take a quick look at here is NVO, Novo Nordisk, up about 3.87% here today. And again, staying in that healthcare sector, the FDA approved Wegovy, the blockbuster weight loss drug, for a new use. It can now treat a form of liver disease called MASH, MASH, which affects about 22 million people in the U.S. Stock was, it is back up over 4% on the news. You might say, why does that matter? Weight loss drugs are already one of the biggest stories in healthcare, but Wegovy and Zepbound are household names at this point. Expanding into new indications like MASH means these drugs aren't just about vanity weight loss. They're about treating serious chronic diseases. That opens up massive new markets. And if you think insurance companies were hesitant before, this kind of FDA approval makes reimbursement much more likely. So again, that could really skyrocket the use case of Wegovy for sure, but it's not been all sunshine for Novo. Shares are still down about 46% this year amid intensifying competition and corporate turmoil. This approval could help them claw back some of that investor confidence. We'll see what we get there. If we look here at the tick and the advanced decline, still moving to the downside here, although the Dow Jones has gone positive here slightly, up about 3 basis points. We do see the SPY and the Qs, although the Qs are about to, there they go. Qs just went positive again. The Russell 200 or 2000 is slightly up also. VIX is spiking, not spiking, but moved a little bit to the upside, 5.4. But I will say in the pre-market, it was at 5.9 or 15.9. So it is just pulling back slightly here. Dayforce is sliding down. So last 3 hours, we've seen a little bit of a pullback here. Let's see if anything else is pumping this morning that wasn't on the pre-markets. I do see one, Liberty Global here. Liberty Global, which wasn't a runner this morning, now moving up tremendously on low volume, though, here. Very low volume. Liberty Global up about 12.53% here since the cash open. See if anything else popped in. The others were the names that were basically already there, so I can get back into my notes here. Tick down 100 still, advanced decline down to 77. Dow Jones is slightly up. I do see our man BigBeat here coming into the room. We might be able to pull him in. Let's see what he's up to. BigBeat, what's going on, my man?
Good morning, Howard. I just left the NYSE TV. You know, one of the things being talked about on the floor right now is the big question mark around Jackson Hole. This is going to be one of those question marks. I said this live a few minutes ago. This might literally be the most watched Jackson Hole in history, because I think Powell literally knows that he is out. He knows he's being replaced. We know that the 25 basis points is already cooked into this market. Where do we go from here, right? Are we going to get the 50 basis points? And the answer is definitely no. We are not going to get the 50 basis points. Are we going to get it down the road? Probably, yeah. It's going to take a few months, actually. But the question mark around that is housing and real estate and the commercial real estate space as well. There are some serious cracks in the economy going on, and we all know that. But this is IPO season, and this could be one of the best IPO seasons in history. Include we could go by 2020 to have a better one. But the difference is when you look at it from the perspective of the cash market. Do we have meat on the bones when those IPOs come out? Circle, Figma, you saw those come out, and meat on the bones meaning in the cash market. Is there still money out there to be able to buy those shares? And the answer is yes, there was. But the shares went sky high. So Howard, that means that pretends to be a good economy, good markets. Now we all know the market isn't the economy, so we all know that there's a separation. But look, this is all about Jackson Hole this week, I think.
Yeah, like you said, housing and home builders too. You know, a big part of that is, you know, the S&P Home Builders ETF is near a multi-year high. Names like D.R. Horton, Lennar, Toll Brothers have all posted double-digit gains recently. So, do you think that that's the right move? I just asked the crowd here. You know, what do they think about also Buffett? Is he right? Is it value in UNH right now? Is he finding value? Or is he just trying to swing for the fences before he leaves?
I don't think that this was Warren Buffett's complete decision. He has a whole team around him, right? Look, he likes insurance. It's a cash cow. He likes that money coming in every single day and daily and monthly. He loves it. So he's buying that, right, for the future. Insurance in the future is going to be very good as these people get older but healthier, right? We've already seen this. We're already seeing numbers for Social Security changing because I saw this over the weekend, where the Social Security Administration is going to have to actually work on changing out those scales, meaning that when do we start to turn on Social Security for people, right? Because they're getting healthier. If they weigh less, they're not as obese, they die later. Then all of a sudden, these numbers, healthy gets healthier. It's a whole downhill spiral that we're going to change the narrative here. And in doing so, that narrative, you're also seeing the fact of how they disperse it, right? Because there's going to be certain areas of where they disperse it, and that's the insurance. So does Social Security pay for, more? Do they pay for the spouse if they die? Now you have a lot of people that are going off those rolls very quickly because of the deaths in the baby boomers. But he is seeing some serious alpha here, and he saw it on this dip. And a lot of the selling was zero DTEs and things of that nature. Again, they're wrong, and all of a sudden now you see this pop. Was UNH up again today? Yeah. So. So you're looking at we saw that. I mean, we talked about this, Howard, on the show. Look, I didn't like the fact that the CEO was having issues. I didn't like the fact that they were having problems with their accounting. That's always a bad problem. But they're going to get that cleaned up. I promise you. Warren Buffett will go in there and he will clean it up. He has a whole team to do that, right? So they will get that cleaned up, and I'm not too worried about it. UNH is a long-term win here. I think $400 or $500 a share would be nothing compared to what it could be in the future. So if you're a long-term holder, I think you're going to be okay.
Absolutely. This week we got all our big box earners coming in: Walmart, Target, Home Depot, Lowe's. Which of those are you most interested in, BigBeat?
Yeah, I was clearly asked about that this morning on NYSE TV. Yep, Walmart. I want to know what the retailer's thinking. Look, in the beginning, we heard it from Powell talking about how these numbers, these tariff numbers, how are they going to affect the retailer? Are they going to pass them on down to the retailer? The answer is no, not really. They haven't. They have a little bit, but not to this degree of which they thought the tariffs are going to be. They had been packing their stores and packing it up and getting the manufacturing going so that we kind of understood where they stood. We have not passed on that to the consumer as much. Yes, inflation is up. We all know that. Just go to the store and understand that loaf of bread's way higher, right? Eggs have been way higher. We know that. They've come down in price, right? But when you're looking at the bigger picture, you just saw Lowe's and Home Depot. Lumber has cratered. That price of lumber has just gone straight down. We saw it going straight up because of the uncertainty. We've seen it come straight back down and lower than what it was when it first started. Well, that's just the FOMO hitting, right? So when we look at lumber, that's going to help Home Depot and Lowe's, because they were just putting all kinds of lumber into their store, and now it's cheaper. Now they know that, and now they've got a pretty good run here, and they can start picking up lots of lumber for the future. Right. So as price of lumber goes back up, then their margins widen, not smaller. So that's good for them. But to me right now, it's all about Walmart. I need to know what the retailer is thinking. Are they still spending? And I think we need to see the good old Target. We've seen bad articles coming on Target, that they need to get back to that. And they said that. Can you believe it? The CEO actually said the word Target. He didn't even call it Target. He wanted to get back to like the old cliche on Target. So good for him. He realized that there were some mistakes being made. So I like that. Yeah. I think we need to talk about it from the perspective of our Bitcoin here, Howard. What happened to Bitcoin over the weekends?
Pulled back, drop, liquidations, $500 million.
$500 million liquidations. Wow. Yeah.
Yep.
I see tick now pushing up 211 here. I'm seeing crude 61.72. That is not good for the markets here, with oil pushing lower here, $61 a barrel. That tells you that there are some issues here. Look, the three things that Powell has been saying to us: jobs. I need to see jobs. All right, and I need to see 2% on the rates and inflation. So there's the three things that he keeps talking about. Right. All right, you've got clarity on jobs. Not that good. You got clarity on tariffs. Nah, not that good. And you got clarity on inflation. Not that good. So what's he going to say? Right now, we know the CME Fed tool is now saying 93% chances. That's the latest I looked at it, right, of a chance of a rate cut here coming up in September. That's a month away. That's still a month away. All right, the 10-year now sitting at 4.316 is still there, right? But I don't think that this is a problem. I think that you're seeing two things going on. Number one is the people that are being replaced right now are all on President Trump's bandwagon. So he wants rate cuts, they're going to give it to him. The people that are talking that want the job of being Fed chair, Chris Waller and team, they want a Fed cut to his rate. So expect that to happen. Expect that to happen, Howard. Now, if Powell gets replaced, and Powell knows he's being replaced, the question is not if, it's when, right? So when is Powell going to get replaced? And I think it could be sooner than later. And I think that's what some of this excitement is running around the markets here right now.
Wow. Okay. We all, with that being said, we have jobless claims on Thursday. Weekly claims are one of the cleanest leading indicators we've got. If they start trending higher, more reason for the Fed to cut aggressively. If they stay low, the Fed might feel comfortable moving slower. So, that's going to be a big one coming this week for sure. You asked about Bitcoin. I'd also point out, though, that while Bitcoin is dropping, the inflows last week to both Bitcoin ETFs and Ethereum ETFs. So overall, it's still, a strong structure. This is just a pullback in liquidations.
I agree. Yeah, I agree. I love it. I'm still buying. I'm still long AI, by the way, C3. So I've been buying C3, as you know. I bought a little bit this morning in this early period. It jumped up this morning, and I did not take my profit. I think it's showing you where the tops are, and we can blow through those. So I do still like AI, and I've said this since earlier today on the show too, as well, that we're not even in the first inning of AI. Right? There's still a lot more to go here at the beginning of this. People aren't even sure how to use AI yet. But if you ask people, do you have ChatGPT in their phone? Almost everybody goes, yeah, I do. Do you have Perplexity? Yeah, I do. How are you using it? Write a song. Give me some answers. They're not really using it in the way that it was really, really, really intended. And that's what's cool about it, because we're going to really change the future here. So I'm very excited about this.
Awesome.
In fact, I'm keeping my eye right now. Tick's now up 300 here, so I'm excited about that. Silver
on positive.
Silver at 38.09 here, Howard. Gold and silver pushing a little bit this morning, but a little bit of a pullback here.
Yeah.
Dollar still sitting at 98.07 here. That's interesting to me. It is holding. That is one thing that Powell could really affect this week is the dollar. The Dixie could push higher, and a stronger dollar could very well affect all of the markets here. So we do need to keep our eye on Powell for the whole question mark around the Dixie here.
Absolutely.
Ron saying WULF is gaining attention here.
Yeah, they're one of the pre-markets movers. They signed a new deal, AI deal. Up about 14.6%.
The tick's still holding up here, 293 here, up 300. That's telling me that there's still some push here a little bit to the upside.
Yeah. Dayforce now back up 27.19%, moving back to the upside again after a little bit of profit taking.
Yeah, Ron was saying a deal with Google. Google's making quite a few deals out there to keep up. I think that's what we talked about. I hate to say it this way, but Google's old tech now, right? I mean, some of these companies that we thought it was new tech is now old tech, and to keep up, they're having to buy and M&As and actually having to invest in these companies. So we've been talking about that for a while.
Absolutely.
Surprised we haven't talked about Tesla in a while. Tesla's gotten kind of quiet. Elon Musk got the here, but Tesla now up $2.50 here on the early trade.
Yeah, haven't heard much from Elon lately. They did. It's up today. Tesla's up today though because they announced tax benefits in the UK.
Very good. That's as it should be.
Advanced decline now at 1,400. So after that early sell-off, we do see that moving back to the upside.
One stock that Warren does own is Domino's Pizza, DPZ, and look at that stock, 452.74. They're right in the middle of the range here. That will tell you a lot about how the retailer is feeling.
Bitcoin dropping back down, Ethereum dropping back down. So after that pump, could see more downside.
AI back to $18 a share now. I think we get right back up into those 1820, 1830 handle again. I'm liking this. I'm going to stay long though. I'm very long AI, but I'm not heavy, but I'm very long. I'm staying long. I think that it was beaten up for no reason. I think you're going to see some news come out of that company. Look, one of the things that I said, I did it last week, and most of you know I was in the Florida New York Stock Exchange last week. I said, look, there's a rumor out there about Warren Buffett buying UNH, and there it is, right? It came out, and we've been talking about on this show. Why was that easy for me? Because these are companies that he likes, and we as investors, we need to be thinking about that, right? We need to be thinking in a way that says, okay, I need to think like a Warren Buffett and investing. And he looks at cash. So these companies that are kicking off cash are telling you everything you need to know. So right here, if you see it, as you posted here, Walmart, Target, Home Depot, and Lowe's, if those come out good, get ready, because we're not done. But the cracks in the ceilings, because I think people don't understand this. The economy is not the stock market. It's two different things. Now,
right.
in the past, on the average, the market is usually about roughly 8 to 9, possibly sometimes 10 seasons ahead, right? Quarters ahead, meaning that we are buying because, right, mispricing and pricing. We believe that the price is going to go higher or lower in the future, right? And we're usually 10 months ahead, 6 months, 8 months, 10 months, because that's where we're at. This time around, we are roughly 2 to 3 years ahead. And because a lot of people think that we haven't priced in the AI. If you don't think so, look at Palantir stock. It's exactly what it's telling you, right? Well, they think that Palantir is the future. And they're right. It is. There's a little more of a pump there on C3 there, Howard. And they're right. And that's why they're investing in it. They were wrong at $30. Are they wrong here? Probably a little bit. We're way ahead of our skis here. But we know that, right? Okay. Where else or should we find alpha? That's the question I was asked. Where else are we looking for? And healthcare. I said that healthcare. And so I think that's why Warren bought it. It's a 2-Emmy for him, right? Two-for. Now, first of all, it's healthcare, and second of all, it's been beaten up. And then if 3 things, it's cash cow. So he wins all the way around. So that's why he
absolutely
up, right? Yeah. So I like that. Look at this run here in. I do like this run here in C3. It could keep on going up as tick is dropping down just a little bit.
SPY's gone back. Everything up. All the indices have gone back. Slightly negative. Dow Jones almost completely flat. SPY down about 6 basis points. Q's down 18 basis points. Advanced declines come back down to 1,300. So it's been a pretty. The algos have been fighting it out so far today.
Yeah, this is I mean, the world right now, we just talked about it 2 seconds ago. Very simply, Howard, it is all about Jackson Hole. Wednesday, right? It's Thursday through Saturday on the weekend, and Wednesday will be the big day because you'll start to see some of the talking heads on CNBC and Bloomberg that are actually at Jackson Hole, Wyoming. And they'll start to talk about things. Do you know what the first question I asked this morning when I asked my Alexa was not the weather in Florida. I asked about the weather in Wyoming. It's 43 degrees in the morning, 85 in the afternoon, right? Why is that important? I mean, Steve, that's ridiculous. Am I asking about the weather in Jackson Hole? Because you know what they do in Wyoming? They do the outdoors. They love the outdoors in Wyoming, right? They're going to be outside and they're going to be talking about the markets. Right? They're going to be inside during the day because it's hot, outside in the mornings, right? Why is that? They'll be moving around. That's very important. Now, if you've ever been to meetings like that up in Jackson Hole, and I've been in 2 of them, I can tell you that going from inside to outside all the time, right? That they are talking. They are moving amongst their people, and they're running around to go get questions and answers, right? Because you have the Fed symposium. This is a symposium. Right? This isn't just like a big old conference, boring conference. It's a symposium to tell you exactly what the Fed is thinking. And the Fed is thinking 2 things. How do I keep my job? Because everybody around me is losing it. And is Powell gone? Am I supposed to listen to what Powell has to say? Or am I supposed to listen to what the president has to say? Right? They're not independent anymore. So they're very nervous out there, Howard. They're very, very nervous. So a lot of them don't want to be talking to the public, the press. A lot of them want to go skiing. A lot of them want to get outside and go eat a steak in those massive steakhouses in Wyoming. That's what they're doing, right? They don't want to be caught with a camera and a microphone in front of their face. They don't. They don't want to have to answer the questions. Am I in trouble? Am I going to lose my job? Am I, what do I need to say here to appease the markets? Is the market going to crash because of something I said? Am I going to be all over the news? Normally the Fed, let me ask you this question. And you know this, Howard. I mean, in the past, how many times does Neil Kashkari like a microphone and a camera? I mean, he loves the camera. He loves it more than I do.
They can't wait. They can't wait to talk. There'll be more talking, more,
And how much have you seen in the last 3 weeks? How much have you seen the last month? Mary Daly got on at once. You saw
they've been a little quieter. They definitely been a little quieter.
Correct. They've been a lot quieter. Are they in the quiet time? A little bit, but not quite there, right? The symposium is going to tell you a lot. And I think they're going to try to do their best to avoid cameras. They're going to be very, very staunch about their answers, very canned. I expect them to be very canned. I expect Powell to be getting some serious questioning this week. And I think the real question, and I was asked this earlier today, what's the big question that I'm looking at? It isn't a question I'm looking at. It's how Powell answers. Not the actual answer, but how he answers. Is he nervous, and how fast does he run off the stage? Does he get really abrupt? Does he tell his handlers, get me off the stage quickly, right? That's how you're going to know how much on the hot seat that Powell actually is. And so because of that, I think that's what I'm looking at the most.
Yeah, I mean, we'll see. It's hurry up and wait this week.
Yeah, I can see that. Yeah, I like that answer.
Tick is still negative. Advanced declines come back down to 675. So after what looked like that bullish tinge to the market, it is now seeing a little bit of a sell-off, a little bit of profit taking here, a little bit of weakness.
Yeah, there's a lot of weakness here. This is algo fighting. There's nothing more. This is not retail going crazy and buying 0 DTEs today. They're nervous too. They really don't know what to do here. And listen, if you want to see what the retailers are doing, just look at silver. Keep your eye on silver today, dropping here. Obviously, gold is dropping too. And guess what's pushing up? The dollar, right? We said this morning, right? Keep your eye on the dollar, the Dixie. If it pushes over 99, if it gets anywhere near 100, wow, this could portend some serious problems here. But right now, I'm not too concerned yet. Look, I've said this a lot. I talked about this last week, 2 weeks ago. Look, Dan Niles, Dan Ives, both those guys have been telling you, look, come Thanksgiving, things are going to be rough. And I expect that, right? This is what I'm telling you right now, that that's not a good time normally. August is usually not a good month, right, for the markets. So we need to be very careful.
Absolutely. 10-year and 30-year are also moving up a little bit this morning. We now see, in spite of select funds, almost all of them to the downside. Healthcare, the one that's holding up here, again, being led by UNH and the sympathy plays from there. Real estate's pretty flat on the day, and actually consumer staples up about 1/4 percentage point so far. So that's a mixed day so far. Looks like it's sell the rip so far today more than buy the dip. Steve, what do you think we finish up here as we close out?
I think we finish flat. It's a salad day. Chop, chop, chop. There's not much here. There's no meat in the bones. I'm staying on the sidelines. I have my positions. I've not. I mean, as you know, I've sold 10% of my bigger portfolio off already, preparing for this sell-off. And I like dip buying here, right? This is a stock picker's market, so be a stock picker, right? Find those alphas. Warren did it. I've done it. You've done it, Howard. Be a stock picker out there, and I think you'll be happy down the road.
And Bitcoin and Ethereum dropping here as we go. I do see more downside for both here today. I don't think we see the buyers step in yet.
No.
So everybody from Quasar Markets, have a great day. We'll see you tomorrow morning.